Hi, I'm Peter Rose, founder of Longwood Currency Trading. It's a beautiful day. I wanted to come out and sit here. I probably won't sit here very much longer. We'll walk around a little bit. But there's always a Forex trade to be made. There's always going to be a trade available to you, even if you're only trading one currency pair. And I'd like to discuss this and what my thoughts on that are, because conflicting to that are so many folks that talk about trade setups and waiting for the right opportunity to come and all the rest of the stuff. And I'd just like to kind of address some of that for you because it's an interesting topic and one that I think needs to be addressed. Speaking of wonderful things, Sue's flowers are starting to pop up already. Daffodils are coming. Man, we're in good shape. We're getting in good shape. Walk around here to the front. I'm sorry, it's a travel log. We'll get to the topic of the video in a second. Okay, you got to appreciate the beauty of the nature around you. Well, those gardens aren't ready, but we've got some stuff popping up there, so that's nice. A lot of chipping around the bottom of the house where the snow piled up this winter. I'll have to get that fixed up. All right, so much for the travel log. I'm going to go up here to the gardens. Sue and I just got back not long ago from walking the bow dog in a new set of trails not far from here, different mountain, great big fields. Must have been 20 acres of fields where we broke out of the woods, 20 acres of fields or so, and we walked to the other side of that, and there's an old cemetery and all kinds of rock walls up there from the 1700s, 1800s, when a lot of that was all farmland. In any event, trading. Yeah, trading. There's always a trade to make. You know, the gamblers, the dice throwers say, you know, the dice is being thrown somewhere in the world every minute. There's always a game. And currency trading is particularly that. It's 24 hours a day, 5 days a week. How much better could it get? You can play the game anytime you want. When I started trying to develop my FOREX methodology, I didn't want to have to sit in front of the computer all day. I didn't want to do setups because I don't believe in setups. Anyway, getting back to it, I didn't want to complicate my life with setups, and I didn't believe in them then, as I said I don't now. And so I take that off the plate. But I did want to trade just like a 2-hour. I want to be done with it. There's a trade there, there isn't a trade there. If there isn't a trade there, I'm gone, and whatever. And so, corresponding to that, I only wanted to trade one currency pair, because I think that you develop a sense for the two pair countries. Remember, we're looking at the economies of two different countries, and so what are you going to do? You're going to look at all 6 of the major pairs, or are you going to do exotics, or what are you going to do? You have to have some kind of an economic feeling for what's going on in the different countries if you're going to be able to develop a trend bias, for example, or understand a little bit about interest rate theory, so you can tell, oh, these guys are going to jump their interest rates like crazy, so the other country is going to suffer as a result of that because they can't offer as good a rate on their debt. So you just can't be trying to do that with 6 different pairs or 3 different pairs, I don't think. You can do that, but that complicates what you're doing, and it increases the amount of stuff that you have to know. And I didn't want to do that. So I want to trade 2 hours a day. I needed to set that time up so that it was the same 2 hours, because I like to get up in the morning and get my coffee and get on the trading desk and see what's going on, and then get done with it, and then I have the whole rest of the day to trade. I don't want to go out and try to have a good time and then know I have to get back to the trading desk so I can trade in the middle of the afternoon. So I've got a constriction on my time when I'm going to be at the trading desk, further constricted by the fact that I only want to trade one currency pair. And so you'd think, man, and I don't want to have any setups. Well, how are you ever going to get a trade going then? Because you know, you just can't have the forces of nature line up so that when you determine you want to sit down at 8 o'clock in the morning or whenever it is with your little cup of coffee and that there's going to be a trade there. Well, there is going to be a trade there. Now, it depends on what time frame you're looking at. If you're talking about, I'm going to sit down here in the sun. Let me park myself right here up against this rock wall. Hello, rock wall. Hello, flowers. Hello, me. If you're going to rely on setups or patterns, then yes, when you sit down at any time, it doesn't make any difference when you're sitting. You could sit down at the opening. There's probably at least an 80 or 90% chance that you're not going to find a setup, or let's just call all that shit setups. You're not going to find that setup to take that trade. And I think that's very limiting, because I don't think it's the setup that dictates whether there's a trade there or not. I think it's the price action itself and the momentum that that price has at any given time that is or isn't in confluence and harmony with some major trend. I'm trading on the 5-minute chart. That trend may be strong enough on a 15-minute upper time frame to say, oh, I've got confluence on the 5-minute, it's going up, 15 minutes going up, I'm good to go. You may want to go out to the 1 hour just to make sure that it's sustained. But you have to remember, if you're trading on the 5-minute time frame, things change in 15 minutes, 20 minutes. Well, that's fine, because in 15 minutes, if you get a 5-period ATR, which most of the majors would have around a 5-period ATR on that 5-minute chart, that's 3 5-minute candles, right? And if they're all popping up at the same time, that's 15 pips. That price is going to move if you catch it at the right time. So you miss 3 or 4 pips at the beginning, you jump in there and you grab 8 pips or 10 pips, and you're out before the candle swings over and you have a minor retracement. What's the problem with that? Everything that I based my trading on was, how good can I do as a 60-40 trader getting 5 pips when I win, maybe an average of 10. Because you have to overcome whatever your loss is, and that's why I set such a short loss as a stop, 8 pips or 10 pips. In the beginning, if you go back in my videos, it was 8 pips, and now I'm loosening that up a little bit to 10 pips, because I'm finding that if you have the right structure, you don't hit that stop very much. I mean, if you're a 70-30 trader, you don't hit that 8 or 10 pip stop. It doesn't make any difference where you make it. You don't put a stop on it because you won't hit it enough times for it to make a difference. When you're a 70-30 trader, it means that you're becoming more experienced, and that your average winning value when you win on the trades is, I mean, as a 60-40 trader, if you take a 10 pip stop and you only get 10 pips when you win, if you're break even, you're still winning 20 trades over the 100 trades that you take. So that gives you the profit. Now, is that enough profit at the end of 100 trades to say it was worth my while? You know, is that going to pay my electric bill on a monthly basis, or is that going to replace my job income? And probably not. But what do you expect as a 60-40 trader? If you're a longer term trader and you're cutting your losses short and you're looking for the 100 or 200 pip move or the 50 pip move, and you're willing to sit there for a week or 3 days to get that, then the methodology changes a little bit. It's my belief that if you learn to trade on that long time frame horizon basis, you wouldn't be able to back it up and trade on the shorter time frames. The shorter time frames will teach you that there's a trade there all the time and the reasons for that, so that if you decide that you feel more comfortable as a longer term trader, you can directly map the stuff that you're doing as a shorter term trader up onto the longer time frames. However, it is not my opinion, but it's just a fact if you look at the statistics and stuff and the methodologies and structure, that if you learn to trade on the upper time frames, you're not going to be able to transfer that directly down into the shorter time frames and be successful. And that's why all the guys that are trading long term warn you vehemently against day trading, and particularly a short-term 5-minute time frame trading, because they don't know how to do it. They lose their money all the time. And yet it's very simple for me to take a short-term trades that I'm doing on a 5-minute chart and go, hey, I got a runner here. Let's change the framework now to take a long-term position trade, trail the stop up, start staging lots in, and run it for all it's worth. So, but how often can you start out at entry and say, this has got to be a really strong entry because it's got to go 50 pips or it's got to go 300 pips? You're not going to get that. So in that case, yeah, then a setup may be something that you'd want to look at, but certainly not the setups I think that are being advocated on on most of the folks that are teaching this stuff. Because first of all, there's a fundamental mathematical flaw in the setup, and there's also an artistic problem with identifying that setup. If you looked at a chart pattern and you had guys that were doing setups on engulfing candle patterns, and you didn't have any communication between 10 traders, they would come back with perhaps different engulfing candle patterns as they displayed on the chart as entry points. It's too subjective. And the whole idea in trading, so that it's not stressful and it is reproducible, is not to have a subjective view of the market. I think this engulfing candle pattern here, that's valid, whereas this one here isn't valid. I mean, I think that's a morass of decisions that just create stress. If you're on the higher time frames, you can map that up and you can go, well, look, I'm up on the hourly chart and I've got an engulfing candle pattern on the hourly chart. Well, geez, that could be a runner for 40 or 50 pips, or maybe if you get a runner beyond that, you could get a couple of hundred pips out of that. How long are you going to have to wait until you get that sort of a setup, though, if you're trading on the hourly or the 4-hour chart? Now, you might only trade once a week. You might only find that. If you think you're going to find setups on a daily basis, if you're trading on a one hour chart or the 4-hour chart, you're sadly mistaken. It's not going to happen. On the 5-minute chart, there are 12 5-minute candles an hour. That means I have 12 opportunities an hour to determine whether there's a trade there. Don't you think that within 12 times of that candle movement that I'd be able to find an entry? Well, I don't think that. I know that. I've been trading live account in FOREX since 2012. It's 2023 right now. I used to trade up on the hourly chart when I first started. I didn't have any success at all. I'm down on the lower time frame charts. I've been down there for a long time, and I don't know. I can lose a whole lot of money and whatever, but as long as I'm coming out positive on a significant enough basis that it meets all other investment vehicles, including real estate, which I have to wait, 5 or 10 years in order to get that compounding from the real estate, I can make that same yearly percentage gain that I would in real estate. I can do that in a month and a half or 2 months. So 3 months maybe. So, and that's only because on those shorter time frames, if I get into the trade and I go, whoops, I made a mistake here. I got a judgment. I got an improper judgment call. I'm going to cut that loss. I'm going to cut it short. We're up on the higher time frames. If you are saying, well, look, I'm looking for 150 pips. So according to all these gurus out there that talk about risk to reward ratio, I'm looking for 200 pip gain so I could take 100 pip risk. Really? If you really don't know what you're doing, do you really think that a 60-40 trader, you're going to be able to make enough money taking 100 pip risk and going for the 200 pip gain? And most of the time you're not going to get the 200 pip gain because you don't know what you're doing. So you're more afraid of losing that accumulated profit, but you'd let the risks go. Let's just say you don't let the risk go beyond the 100 pips and you religiously take that 100 pip loss. Okay, and you got the 200 pip target each time that you do that. How many times are you gonna throw a flag on the field and get out at 25 pips or 50 pips or 10 pips? Because you can't take the pressure. The thing is gyrating all over the place. Oh, you say, oh, I'm just going to check the price at 5 o'clock or something. At the end of the day, I'll base my trading decisions at the end of the day. Really? Well, how many times do you think that price is going to turn around? It go up 50 pips in your favor during the day, and then it falls 60 pips, and you're going to get tagged out. I just don't get the logic or the rationale behind all of that decision making and how that isn't more stressful than what I do on a 5-minute chart. I look at it. Hey, that looks like it's got some juice to it. I'm in. Oh, it didn't work. I'm out. I lose 5 pips. I lose 8 pips. I got my finger on the trigger. Just take it out and go. Many times when I'm doing my trading, I treat the exit from the entry as a scalp. If I'm unsure in any way of the momentum, then as soon as I notice that the price is just not, I thought it had the momentum and that momentum should continue, I hit the button to get into the trade, and you're losing whatever the spread is right away. Your trade is negative right when you hit the go button, and so what do I want to do? I want to lose 3-4 more pips than the 2 that I'm already going to lose just because of the spread. So I wait 3 pips. I got 2 more there. I'm 5 pips out. Why am I waiting if I am looking at price action and it's not proceeding the way that I thought? I'll get out at 5 pips. My stop might be 10, but that doesn't mean I have to take a 10 pip loss. If I get feeling queasy about the trade, I can get out anytime I want. So you do that as a scalper, but you can also reverse that as a day trader. You set your 10 pip stop, and you've got a 20 or 30 pip profit targets that you're looking to get. You figure you're not going to get the whole 30 pips or the whole 20 pips because you set that as a profit target because there's some type of order flow congestion in that area. And so you figure, well, I'll get 15 pips. It'll take me 5 pips to get in, and I'll grab 15 pips. That's a 20 pip move, and then I'm good. I'm out. I get in that trade, and it's going along. I'm okay. It didn't drop and go against me, so I'm in the trade. It's in profit. It's moving in profit. And it's going along, and it's 5 pips up, it's 6 pips, 8 pips up, and now it starts to stagger a little bit for some reason. And I'm out. As it staggers, you're not going to tell the stagger right away. It'll take you 4 or 5 pips to determine that there's a stagger there. I'm 8 pips into the good. I got a 4 or 5 pip stagger. I'm going to get out. I get out with 3 pips profit. You say, well, what good's 3 pips? I'm trading 1 mini lot. That's only $3. Yeah. But I'm trading 10 lots. It's $300 to me. It's the same percentage gain, but it's $300. You do $300 a day, 5 days a week. That's $72,000 a year. That's pretty good. And that's only on 3 pips. That's the power of how much you can make. I mean, look, you trade a $100,000 account, so I can trade 10 lots, so it's $100 a pip. So 3 pips is $300. So all I got to do is get 3 pips a day, averaged out every day, 5 days a week. How tough is that? That's not real tough. The problems that we get screwed around with is that we're looking for the 20 pips, or we're looking for the 10 pips, or we set the stop low and we're unwilling to get out when it goes low. But from a practical standpoint, from a mathematical standpoint, that 3 pips is relatively easy to get. Well, $72,000 a year in profit divided by the $100,000 bank that you have, because you need $6,000 in margin per lot. That gives you $4,000 of runway. So you could really trade the position with $70,000 and you'd make $72,000. You'd make over 100% on your money. But regardless of that, if I do it the way that I do it, with my risk control, I've got $100,000 to trade 10 lots. The fact that I could trade 15 or some is immaterial. I'm not going to do that. There's other things that I do with that extra money later. But my bank at risk is $100,000, and I make $72,000 against that. That's a 72% return on my money for 3 freaking pips. So when you're trading your mini lot, you do the same thing. You look at that and you go, hey, this isn't going in my favor. I'm going to get out at 3 pips. It's $3. But don't beat yourself up. Don't kick yourself in the ass, because what you're trying to do is get good trading metrics, good win-to-loss ratio, and as I've said 1,000 times, that viable average win value that gives you the backing behind the win-to-loss ratio. So that means, because of all that discussion that I just provided for you, that means that there's always a trade that you could take. Somewhere, if you're down on that 5-minute chart, somewhere within that hour, you will find a trade. Now, you don't force the trade. It has to be there. It has to have your entry conditions. Now, what are those conditions? If you're using moving average crossovers or Bollinger Bands or Fibonacci's or engulfing candle patterns or flag patterns, you are seriously mistaken as to the success of your trading on a 5-minute chart. It's not viable. Those things are more viable on the higher time frame charts, indicators and stuff, and they're also really only valid when you get into position management as indicators of order flow. But when you're talking about entry analysis, they're not valid, because in entry you're concentrating right now, what's happening right now. So because you're concentrating on what's happening to price right now, and you're on a 5-minute chart, within an hour you'll find an opportunity to make that trade. Now, maybe you don't understand how to do that. Maybe the folks that you're trying to learn this stuff from don't know how to do that. That's okay. I know how to do that. That's how I trade. You can dispute that or not. I'm just telling you that if you're listening to people that say you can't trade unless your setup comes through, or there's some kind of pattern that you're looking for, or God forbid you're listening to these fools that are talking about the fucking London Open and stuff like that, that's just craziness. That's craziness. You can sit down at your desk if you know what you're doing, and within an hour you can have a trade going, and within the next hour, for sure, maybe the next 15 minutes, you can be done for the day. That's what I call simple, and that's the way I want to run. Peter Rose, Longwood Currency Trading. Have a great day. and have a great trading day.